Good afternoon. Yesterday, the market threw a punch. It derated its best companies for spending, sent oil through $100 and priced a war. Today, it got counterpunched, and the counterpunch won. Intel, one of the companies that gets paid for the artificial intelligence build-out, posted its fastest revenue growth since 2011 and jumped double digits. Oil gave back nearly all of yesterday's war bid, cratering 5% on the first whiff of diplomacy. And Washington slapped a fresh tariff on 99% of everything America imports, and stocks went up. Every single fear from yesterday got an answer today. That is not a market in denial. That is a market learning to tell a scare from a story. Let's take it in order. Here's the board, and today the colors are mixed for the first time all week. The S&P 500 rose about 0.5%, back near 7,400. The Dow gained 0.7% and broadened out. The Nasdaq was roughly flat because the chip rally that started overnight faded into the close. Brent crude fell 5% back below $95, giving back most of yesterday's war premium. Bitcoin slipped to around 65,000, still a hostage to yields, and the 10-year Treasury yield sits near 4.71%, the one number that would not cooperate, one thing under the surface worth holding on to. The famous Magnificent Seven are actually down about 4% this year, while the other 493 stocks in the index are up nearly 13%. The market only looks flat. Underneath, it is rotating violently. The signature segment, consensus versus the read. First, and this is the whole issue in one contrast, the consensus after yesterday's rout says the artificial intelligence trade is cracking. The tell says the supplier just printed its best quarter in 15 years. Yesterday, Alphabet raised its spending ceiling to $205 billion and got fined 7% for it. Today, Intel, a company that sells directly into that exact build-out, reported revenue up 25%, the fastest growth since 2011, with its data center and artificial intelligence unit up 59%, and it guided next quarter higher. The stock popped 12 to 13% after hours. This is the bifurcation we have been pressing. The market is marking down the funders of the boom on cash flow grounds and marking up the recipients on earnings grounds. The check writers and the check cashers are being scored on opposite ledgers. High conviction on the structure. Second, the consensus says $100 oil confirmed the supercycle. The tell says the premium was words again, and it bled 5% in a single day. We said it Wednesday and Thursday. The war premium is two-sided, and it evaporates on one credible truce signal. It took barely 24 hours. Brent crossed 100 yesterday on physical tanker attacks. Today it fell 5%, below 95, because Pakistan, with Chinese backing, moved to revive talks between the United States and Iran, and Beijing decided that a closed Strait of Hormuz hurts China most of all. The floor is still physical. American forces ran their 13th straight night of strikes, so we do not fade this to zero. But the speed of the give-back is the lesson. In this tape, geopolitics is a rented premium, not an owned one. Grading this call correct, with respect for both sides. Third, the consensus says a tariff on 99% of imports is a risk-off event. The tell says the market already voted, and it voted up. At 1 minute past midnight, replacement tariffs of 10 to 12.5% hit 60 countries, covering nearly all American imports. That is a classic headline to sell. Instead, the Dow rose 0.7%, and the S&P gained. Why? Because the rate came in lower and more predictable than the tails scenarios the market had been pricing since the spring tariff chaos. Certainty beats severity. The read. This tape has been so conditioned by tariff brinkmanship that a defined, moderate number now reads as relief, moderate conviction, and one honest caveat. The inflation bill for these duties shows up in the data over months, not in today's tape. Follow the money. The regime did something unusual today. It de-escalated on 3 fronts at once, and the only thing that would not relent was the cost of money. Start where the pressure eased. Oil surrendered most of its war bid, taking the most acute inflation input off the boil a week before the Federal Reserve. The tariff overhang resolved into a defined number the market could digest. And the earnings verdict, the thing that actually spooked everyone yesterday, got reframed by Intel. Capital spending is not vanishing into a hole. It is landing as revenue on the recipient's income statements. 3 of yesterday's 4 fears got smaller by this afternoon. The 4th fear did not budge. The The 10-year Treasury yield sits near 4.71%, close to its highest since early last year, and it is the one variable that refuses to cooperate. Higher oil for a week, fresh tariffs feeding into goods prices, and a Federal Reserve the market wants to read as a hold next week. All of it keeps the long end sticky. That is why gold, sitting near $4,050, cannot catch a bid despite a live shooting war. The metal is not afraid of tankers. It is afraid of real yields, and real yields are winning. The same mechanism sinks Bitcoin to around 65,000, a pure risk asset getting outcompeted by 4.71% risk-free paper and a fresh dose of tariff-driven inflation. The dollar near 98 stays quiet. For now, the whole macro drama is being expressed in one yield and one commodity. The sentiment beat. Across market and social sentiment monitoring, the mood did a full round trip in 24 hours. Yesterday, the commentary layer was running victory laps, declaring the spending emperor had no clothes. Today, with Intel's blowout and oil's collapse, that same layer went quiet, and the tone rotated toward, well, maybe the build-out is fine after all. When sentiment can flip that fast on 2 data points, it is telling you the conviction underneath was thin. The steadier read is the one the tape keeps repeating. The demand is real, the funders are being disciplined, and the suppliers are being paid. Everything else this week has been noise wearing the costume of a thesis. The tell, Alphabet spent its way to a 7% fine yesterday. Intel got paid for that same spending, its best growth since 2011 today. Put the two nights next to each other because together they are the thesis. A giant hyperscaler raised its spending ceiling to $205 billion and its shareholders docked it. 24 hours later, a chip maker that sells into that exact build-out reported revenue up 25% and a data center business up 59%. Nothing about artificial intelligence demand changed between yesterday and today. What changed was which line of the income statement the market was looking at. The funders' cash going out or the suppliers' revenue coming in. Same dollars, opposite scores. In 1999, the market paid the companies laying fiber and starved the ones who would use it. The payment schedule was exactly backwards from where the value ended up. Today's market is at least asking the right question, not whether the boom is real, but who collects on it. Sectors in play, semiconductors. The bull case, Intel just proved the recipient thesis, revenue up 25%, data center up 59%, guidance raised, and Alphabet has now guaranteed another $200 billion of end demand. The bear case, the group still trades with the Nasdaq on beta days, and today's chip rally faded into the close, because Intel at 94 times forward earnings leaves no cushion. The read. The earnings evidence favors the suppliers, but the tape has not fully re-rated them yet. That gap is the opportunity and the risk. Energy, still the highest variance sector on the board, a physical floor and a political ceiling, a headline in either direction moves it 5%. And the megacap funders, the hyperscalers, and the electric vehicle makers. Demand is proven, nobody is questioning whether artificial intelligence works. But the market has switched from rewarding spending to charging for it, and that reflex will not reverse in a week. The derate of the spenders and the re-rate of the suppliers are the same trade, seen from two sides. On the radar, the new tariffs are now live on 60 countries and nearly all imports, and their inflation pass-through is a story that plays out over months in the goods data, not in today's tape. July 29th and 30th, the Federal Reserve meets. Oil bled off, but the 10-year at 4.71% and fresh tariffs keep the statement language the event, and the market wants a hold. July 27th, China's Kimi K3 model publishes its open weights, and the compute scarcity thesis that keeps Intel's order book full gets independently testable. Around August 8th, the Senate leaves for its summer recess, and with no cloture motion filed on the Clarity Act by today's tripwire, that is the wall the crypto bill likely does not clear. And the 4th and 6th of August, SpaceX's first ever earnings. Then $116 billion of insider shares begin unlocking into a tape already skeptical of expensive names. The scorecard and two dated calls resolved today. First, the oil call from issue 51. We said oil is two-sided, and a ceasefire or diplomacy headline vaporizes the premium. Brent bled 5% in a single session on the first diplomatic signal, about 24 hours after crossing 100. graded correct, decisively, and both sides of the read held. Second, the clarity tripwire, also from issue 51. We said no passage before recess absent a cloture motion by today, July 24th. The date arrived with no motion filed and no floor vote scheduled. Graded correct on the tripwire. The bifurcation call from yesterday stays open and strengthened, Intel being the cleanest supplier data point yet, and two new falsifiable calls dated today. 1. Intel does not guide its full-year capital spending down at its next update. 2. The 10-year Treasury yield stays above 4.5% through next week's Federal Reserve meeting, even as oil de-escalates. Falsified by a close below 4.5 before the decision. A close, the question worth sitting with. When every fear you had yesterday gets a convincing answer today, is the danger gone, or did you just learn which fears were real? Two of yesterday's four scares were rented, oil and tariffs, and gave most of it back within a day. 1. The capital spending verdict turned out to be a story about who profits, not whether it works, and Intel told us. But the fourth, money at 4.71%, never flinched on any of it. The counterpunch landed. The one thing still standing after it is the one worth watching. Frankie's deep dive on the bifurcation is on the channel now. This is Earl, the asymmetric signal, one contrarian read a day. Subscribe.